Hello guys, today I'm going to cover 4 companies in the insurance sector. I'll cover MetLife, Globe Life, LNC Corporation, and finally the Hartford Financial Service. Let's begin this video by discussing their respective share price and their respective earnings. MetLife, according to Yahoo Finance, MetLife bet its fourth quarterly earnings last year. They did beat their first and second quarterly earnings this year, and unfortunately, the estimate for their third quarterly earnings this year is lower than the estimate for their third quarterly earnings from last year. In terms of the share price, the company at the beginning of the pandemic was at 49.71 and it reached a peak of 70.28. Lincoln National Corporation missed its third and fourth quarterly earnings from last year. They missed their first quarterly earning this year, but they did beat their second quarterly earning estimate for this year. And here we can see that the estimate for its third quarterly earning this year is lower than the estimate for their third quarterly earning from last year. Now, in terms of the share price, the company started at 54 at the beginning of the pandemic and it reached a peak of 72. Globe Life missed its fourth quarterly earning from last year. They missed their first quarterly earning for this year. However, just like Lincoln, they bet their second quarterly earning estimate for this year. And their third quarterly earning estimate for this year is greater than their third quarterly earning estimate from last year. In terms of the share price, the company started off at 104 and unfortunately it was never able to beat that record during this time period. The Hartford Financial Service bet its fourth quarterly earning estimates from last year. They bet their first and second quarterly earning estimates for this year, and their third quarterly earning estimate is greater than their third quarterly earning estimate from last year. In terms of the share price, the company started off at 59 and it reached a peak of 72. Let's now move on to their respective financial statements. The first company I'll be discussing is MetLife. Now, before I talk about their financial statement, I'd like to point out 2 things. The first one is that they do not have any cost of goods sold. This will be the same for all the other companies. Cost of goods sold is not present in insurance companies because they do not buy any products nor do they produce any products in order to sell. All insurance companies do is hand out promises that they will give you money if a certain event happens in your life. Now, whether they give you the money is, again, debatable. In any case, insurance companies do not have any cost of goods sold. The second thing I'd like to point out is that there's no general administrative expenses present in this row. The reason why I did not write them here is because MetLife placed all of their expenses in other expenses. All the other three companies did the same, so keep that in mind. They have general administrative expenses, it's just in other costs. They placed those expenses in other costs in their financial statements. Now that that's out of the way, I would like to point out two things in this financial statement. The first one is their government bonds and marketable securities. MetLife has an enormous amount of assets in governmental bonds and marketable securities. And I would like to know more detail about these assets. I'd like to know how much is in governmental bonds and how much is in marketable securities and where exactly are those securities. This could also be a method used by MetLife in order to reduce their respective taxes. The second thing I'd like to point out is the company's enormous accounts payable. MetLife has an enormous amount of accounts payable and a very small amount of accounts receivable. This is very good news to investors, and it puts the management in good light. The reason why accounts payable is so big for MetLife is because the company is delaying payments. They are delaying payments which they owe to their respective policyholders. Policyholders come to MetLife demanding their payment, and if MetLife cannot refute their claim, then they tell the policyholder that they will receive payment within 1 year. That is what accounts payable is made out of. Of course, inflation reduces the expected payment over time, so MetLife benefits from this. They benefit by holding the payment, postponing the payment. Now, for example, let's say that I insure a car for $10,000, and let's say that that car, for whatever reason, becomes a wreck. Now, if the insurance company gives me the $10,000 today, then I can purchase exactly the same car again. Now, this is an over-exaggeration, but just for the sake of the example, let's say that if I get the $10,000 today, I can purchase exactly the same car. But I do not get the payment today. Instead, I get it in 7 months' time. Now, due to inflation, due to the time value of money, the $10,000 I get in 7 months is not the same as the $10,000 I would get today. Instead of being able to purchase exactly the same car, I can only purchase 3/4 of it, for example. So in other words, that means that since that the insurance company benefited by holding onto the money for 7 months, I lost 1/4 of a car, the insurance company gained 1/4 of a car. Hopefully you understood that example. Let us now move on to LNC. Now again, the same thing with cost of goods sold and general administrative expenses. The same case will happen with the other two companies. Now, Lincoln is similar to MetLife in terms of their financial statement. They have an enormous accounts payable and a very small accounts receivable, which is very good news to investors, not so good to the policyholder. They also have very large governmental bonds and marketable securities. Again, I'd like to know how much is in governmental bonds and where exactly are those securities located. The only concern I have is their expenses. The company's expenses are very high. In 2022, their revenue is 19 billion, but their income is only 1,405 million. The company needs to reduce their expenses. I would like to see an increase in income. In any case, let us now move on to the next company. The next company is HIG. HIG does look better than the previous companies. In 2020, their revenues was at 20 billion, and it increased to 22 billion in 2022. And their income rose from 2 billion to 2,365 million. HIG managed to retain a higher portion of their revenue during this time period compared to MetLife and LNC. their expenses are still a bit too high, and I would like to see a fall in. I would like to see a decrease in their expenses, but they are in this case they are better than MetLife and LNC. Here again, the company has a large amount of assets in governmental bonds and marketable securities. And finally, their accounts payable is very large, which is a good thing to us investors. Let us now talk about the last company, Globe Life. Globe Life's expenses are too high. They made $5,112,000,000 revenue in 2022, but they only retained $744 million. Expenses are too high, but income is still better than MetLife and LNC. Again, the company has a very large amount of assets in governmental bonds and marketable securities. And finally, the company has an enormous amount of accounts payable. And again, accounts payable is very large. Possibly the largest out of the four. Accounts payable is 20 times larger than accounts receivable. Again, this is very good news to investors, not so good news to policyholders. In any case, let us now rate all four of the companies. Now, I'm going to place all four of these companies in the OK section. All four of them have decent financial statements. They have a very high accounts payable, which is very good news to us investors. The only thing that they need to work on is their expenses. I'd like to see them retain more of their revenue. I am going to these two companies, Globe Life and the Hartford, they are in a higher position than Lincoln and MetLife. They are closer to buy. The reason is because they have higher income. Both companies retained more revenue than Lincoln Financial Group and MetLife. They still need to reduce their expenses, but compared to the other two, they are slightly better. Now, I'll add them in after the video. In any case, that is all I have to say about all 4 of these companies. The next 3 companies I'll talk about is Coca-Cola, Monster, and Pepsi. Again, I sent an email to Laurel, but I did not receive a response. I'll tell you, I'll do a review of Laurel once they respond to my email. But that is all I have to say in this video. Hopefully you enjoyed it. If you did, give it a like and subscribe, and see you in the next video. I forgot to talk about one more thing, and that's governmental bonds and marketable securities. All 4 of these companies have very large government bonds and marketable securities. The question that needs to be asked is whether it's worth placing so much cash in such securities. Again, this could be a method to reduce taxes. It's possible that if these companies remove some of the cash they have in governmental bonds or in securities, it's possible that the American government will demand higher taxes from these companies. Now, if the companies profit more by avoiding these taxes, then by all means they should have all of that cash in governmental bonds and marketable securities. But if they do not, if profits do not, if expenses do not outweigh the profits, then it would be worth considering, then perhaps it would be worth reducing the amount of bonds and securities that they have. In any case, that is all I have to add. See you guys next time.